they've introduced a new Section 18D. All right, so it should just say new Section 18D. And that says that where fixed property consisting of a dwelling and such property is developed by a vendor who is a property developer, wholly for the purpose of making taxable supplies or held for that purpose, and that dwelling is subsequently temporarily applied by the vendor. So it's temporarily applied, it's rented out under an agreement for the letting or hiring thereof. So that produces an exempt supply, as I say, under Section 12C, but it's a temporary change of use. If it's a permanent change of use, then there's no question that Section 18(1) will apply. But this is talking about where there's a temporary change of use. It's temporarily applied to be rented out as an exempt supply. In that case, the property is deemed to have been supplied by the vendor. So similar to what we saw in 18(1), there's a deemed supply, but the consideration in this case is not the full market value of the property. It's what we call the adjusted cost to the vendor. And that concept, adjusted cost, is defined. It's already defined in Section 1 of the VAT Act. And this is what it means. Adjusted cost means the cost of any goods or services where tax has been charged or would have been charged if Section 7 had been applicable in respect of the supply of goods or services, or if the vendor was or would have been entitled to an input tax deduction. So our adjusted cost is basically all of those costs on which the vendor claimed the input tax credit. So the goods or services acquired on which tax was paid, acquired for the purpose of making the taxable supply, we claimed the input tax. That total adjusted cost is now your consideration on this change of use. But it's a temporary change of use, okay? So in the tax period in which this change of use happens, and the time of supply, we are told in terms of a new Section 913, is the tax period in which the agreement for the letting and hiring of the accommodation in the dwelling comes into effect. Okay, so the date in which the agreement comes into effect is the time of supply. So the vendor then has to raise output tax based on this adjusted cost multiplied by the tax fraction. Okay, so there will still be an output tax, but it'll be based on this lower amount of the adjusted cost instead of the market value. Then, of course, there's still the question about what about the subsequent supply? What if the vendor subsequently sells the property? So initially, they had this proposal that it would be a deemed supply, and then it was pointed out to them that it's an actual sale. So it's not a deemed supply, it's an actual supply. So if that developer subsequently supplies the property by way of a sale, then that subsequent supply will be an actual supply that will carry consideration using the normal consideration rule set out in Section 10(2). Okay, so that's going to be the full amount of the consideration. So whatever you actually sell the property for, you're going to have to raise output tax on that. But then, jump down here, you would then claim an input tax equal to the amount calculated under 1029, which was that adjusted cost. All right, so if you think about it, they claimed the input tax as and when they were incurring the expenses. They had the temporary change of use, and so they raised output tax, which kind of reversed that input tax over here. Then they sell the property, so they've got output tax based on the full consideration, offset by that input tax once again. So it's actually just the difference between the total consideration and the adjusted cost that will carry your output tax. But instead of just having output tax on that margin, which is what they had in the draft legislation, they have now got output tax on the full consideration, and you get the input tax that you can claim as a deduction here again. All right, so that is the outcome of these amendments here. The time of supply, of course, is the normal time of supply rule for fixed property, the earlier of registration in the deeds office or any payment towards the consideration. So the subsequent supply, so no longer what we saw just going back here in BGR 55, where we said that subsequent supply is not subject to VAT. Now we are going back to the previous treatment that we had before that ruling was issued to say the subsequent supply is actually a supply. It'll be made with the normal consideration, raise VAT on that, but offset your input tax. And this is going to come into effect from the 1st of April 2022. All right, so quite an interesting amendment. Hopefully everybody is now happy that this will produce a fair result. Now, of course, we did see some terms that were referred to in this new Section 18D. We spoke about a vendor that is a developer. A developer means somebody who is improving fixed property or constructing fixed property consisting of a dwelling. So it's talking about residential property. And then if we look at the question of temporarily applied, what do we mean by that? And here we're talking about the application of the fixed property or portion thereof under an agreement or more than one agreement for the letting and hiring thereof, and the agreement does not exceed a 12-month period. Okay, so we're talking about a lease agreement for up to 12 months. That would be regarded as being temporarily applied. And then there's a proviso that's saying temporarily applied does not include the application of fixed property and supplying accommodation and a dwelling under this agreement for letting or hiring thereof, where any such agreement is for a fixed period exceeding 12 months. Because in that case, if you have a lease agreement that exceeds 12 months, then it's not regarded as being temporarily applied, so Section 18D will not apply, but in that case, the normal provisions of Section 18.1 will apply. All right, and then you've got the property which is deemed to be supplied at the current market value. Whereas when Section 18D applies, the concession that is given is that your consideration is deemed to be the adjusted cost. Okay, so interesting amendments that are coming through there as far as that VAT is concerned.